Hello and welcome everybody to today's LinkedIn Live discussion presented by ACI Worldwide and Mastercard. I'm Craig Ramsey, Head of RealTime Payments for Banking at ACI Worldwide. Even before the pandemic, real-time account-to-account payments were experiencing rapid growth around the world. But we saw an acceleration of real-time payments adoption ignited by wide-ranging responses to COVID-19. But where payments move freely, fraudsters smell opportunity. And the rise of real-time payments and open banking, combined with the growing sophistication of fraudsters, has opened up a new playground for fraud. We're seeing that certain types of fraud, such as authorized push payment fraud and mule account fraud, are on the rise. Fortunately, cross-industry collaboration is becoming more effective, and it promises to give us powerful tools for the ongoing fight against fraud. Today, I'm joined by fraud experts from ACI Worldwide and from Mastercard to talk about the industry response to these growing fraud threats, covering mature real-time payment markets such as the UK, which is where I'm based, as well as newcomers such as Brazil. And if you've got questions related to today's discussion, please do go ahead and share them in the comments. And we should have time later to answer them and have a panel discussion. Now, one of the most mature markets when we talk about real-time payments is undeniably here in the UK, where the faster payment system has been operating since 2008. But despite the maturity, real-time payments fraud still presents a significant challenge for the whole industry. So I'm delighted to be joined by Liam Cooney, Vice President and Global Head of Product Commercialization, Financial Crime Solutions at Mastercard. Liam, hello, and thanks very much for joining us.
Thanks, Craig, and thanks a lot for having us.
Now, maybe you can start by telling us a little bit about your role within Mastercard and the role that Mastercard has in the UK's real-time payments infrastructure.
Yeah, absolutely, Craig. Happy to do that. So my team and I at Mastercard are focused on commercializing our products that help prevent and identify fraud and money muling across card payments, real-time payments, as well as emerging payment types like crypto. We work with governments, payment system operators, and financial institutions around the world to help them in preventing and detecting the risks of fraud and money laundering. And in terms of Mastercard's role in the UK payment system, everyone's probably familiar with Mastercard as operating a global card network for the last 50 years. But about 5 years ago, we embarked on a journey to extend our capabilities and enable our customers choice in how they pay and get paid. So if they chose to pay from a bank account, that Mastercard could help enable that decision. And it started with the acquisition of Vocalink in the UK, where they operate the payment systems for batch and real-time payments and have done so since 2008. And then we followed on with an acquisition of Nets, which operates payment systems in the Nordics and across Europe. And so collectively, Mastercard now powers the real-time payment systems in 12 markets around the world. But in the UK, where we process the interbank payments, it's that unique position where we see billions of transactions and the data associated with it and trillions of value on an annual basis. And so my team's responsibility in our remit is to leverage that unique position and then the investments and capabilities that we have in AI and machine learning to develop data-driven analytic solutions that help identify anomalous behavior that could be indicative of fraud or suspicious money laundering activity. And so we've been on that journey for about 5 years, and we continue to work with partners in markets where we operate the payment system, but also with financial institutions that are in markets around the world that are in the process of modernization.
So that really is a unique perspective, actually, Liam, with the billions of transactions you have visibility over, the number of participants and banks and financial institutions you work with the mature market that is UK. What are some of the learnings that you've picked up from the UK when it comes to fighting real-time fraud?
Yeah, like you said, it's about 13 years on, and so a tremendous amount of data to learn from and to validate certain assumptions. And I think that the biggest overall learning and takeaway is that fraudsters are going to use the speed of payment systems to their advantage. And generally, we've observed three types of behaviors in which they can kind of capitalize on the speed of payment. So the first is where they'll gain access to an account to deplete it of funds. So this is kind of your traditional account takeover. And as we've seen in the UK and several markets around the world, is banks have introduced advanced capabilities like biometrics to protect the bank channel and their customers from these types of attacks. We've seen fraudsters shift more towards the application of social engineering to dupe consumers and businesses into making payments into accounts they control. So these are scams or authorized push payments. And whether or not they're using an account takeover or a scam to gain access to the funds, ultimately they land in an account that the fraudster controls. And so fraudsters are not stupid. They're not going to let the funds just sit in that account for any extended period of time. And so what they end up doing is they very quickly move the proceeds of that original attack into accounts that they control across several different banks in the payment system. And then they continue layering them through a complex web of transactions, making it nearly impossible for any individual bank or a consortium of banks to follow those flow of funds fast enough to freeze them and repatriate them to the victim. And so I think some of the key lessons learned there and kind of the mitigating factors that can be applied to other markets that are in process of modernization or already rather quite mature is one, kind of first and foremost, there needs to be education of these types of attacks. And I think some of the stuff that we're doing here today is trying to achieve that objective, right? Make consumers and businesses aware of the types of attacks and scams that are out there so that they can protect themselves as the first line of defense. The second is kind of what I touched on, introduction of advanced capabilities, right? These payments are made in hundreds of milliseconds. You can't rely on rules. You can't rely on spreadsheets or human operators to make decisions, right? You need to use advanced capabilities like biometrics and predictive analytics to be able to detect these anomalies and protect your customers. And then the third, and perhaps I think the most novel, is collaboration. So we talked about the unique view that Mastercard has in the UK and some markets. It's being able to connect these dots between the payments coming in of and out of banks, in which we can glean insights that individual banks can't. And it's that position and those insights that we've found are extremely informative to helping banks in their individual efforts to prevent fraud as well as detect money laundering. So collaboration cross industry, sharing of information, and what I really mean is insights into behaviors and patterns that you're seeing, I think is instrumental to kind of level the playing field between what fraudsters are doing, because they realize that within banking and financial services, we tend to operate in silos, but there's enough evidence to see that fraudsters operate as part of organized criminal organizations and they collaborate. And so to level the playing field, we need to drive more cross-industry collaboration.
Right. I think there's a lot there that we're going to need to drill into as we go through the rest of this session, and as we bring the rest of the panel in, I think we'll dig into a few more of those points. One of your colleagues reminded me the other day that when Faster Payments was first launched in the UK, this was pre-iPhone. The iPhone didn't even exist. It was a glint in Apple's eye at the point. So a lot changes, and what might be new today is very rapidly a mature system tomorrow. So I'm going to challenge everyone in the panel in a similar way, and I'm going to challenge you if you could summarize one main takeaway from what we've learned in the UK. What would it be?
I think that you can never be complacent, right? So fraudsters don't collect unemployment. They're kind of like water. If you shore up one area of weakness, they're going to go find the next opportunity. And so that even if it's a mature market like the UK, and we've made enhancements to preventing and detecting fraud and money laundering, fraudsters are going to continue to evolve. So we need to continue to evolve and adapt our strategies. And start integrating not just individual efforts, but the collaboration aspect as well.
Thanks, Liam. That's a great, insightful start. So one particular issue we've seen arise with fraud in the UK is APP, or authorized push payment fraud. And to talk more about this, we're joined by Jackie Barwell, Director of Product Management at ACI Worldwide.
Hi, Craig.
Jackie, hello and welcome.
Thank you. APP fraud, or authorized push payment fraud.
Tell us about that. Yeah, exactly.
It's a term we use to describe the type of frauds that are discovered following an electronic payment that's been made by the authorized user of an account. So let's describe this activity, I guess. When I'm making a electronic payment using RealTime Payments capability, the Faster Payments in the UK, I've learned lots of lessons over the years with my banks. They've been pretty good at giving me education messages. And the first thing I will always use is the device that I typically use to conduct transactions using online banking. Because I know, my bank's told me, that if I want a seamless, frictionless transaction, then if I use the same device or limit the devices that I use to one or maybe two, they can tell the device I'm using and they marry that with me, and there's more likelihood my transaction is going to be seamless, frictionless. So,
and it's your trusted device, right? I mean, it's your device.
Exactly.
You've bought it, you've looked after it, you've cared for it, you've nurtured it through life, and here it is supporting your real life.
It's supporting me in my normal life, yes.
Yeah.
The other thing that I've learned from my bank as well, if you want to do anything on your bank account and you don't want to come into a branch, use the app. The app is secure. I have to authorize myself to use the app. I know it's safe and secure to use that in conducting banking transactions in there, because unless the fraudsters have a piece of me, and in my case with my bank, it's my fingerprint and the knowledge that's in my head, then my bank knows it's me. If I've logged into my online banking app, I'm using my trusted device, the bank knows my trusted device. So I feel I've done everything I can to make sure that the bank is aware it's me that's making this transaction. The other thing is I'm now going to make my transaction. I want to make an immediate payment. I also know over the 13 years we've had faster payments in the UK that the minute I press that push button that says send, that's it, the money's gone. It's irrevocable, can't get that back. So I know I need to do my transaction carefully. I need to make sure I double check and I triple check the account into which I want my money to go and the sort code. And of course, the account name. So I double check, I triple check. Sometimes I do this 4 times. I've got fat fingers. And so I press send. And in some cases, that transaction will turn out to be a bad transaction. The instruction to pay away was somehow manipulated, or there was some kind of persuasion technique that made me trust the payment instruction that I had and I was following and pay those money away. So what kind of fraud types are included under the umbrella term APP? So things like you can receive a request to pay, to conduct a transaction via text message, via maybe a voicemail, via maybe even a phone call, a WhatsApp message, an email, or even a snail mail, a letter through the post. Any one of those things can be somehow manipulated by fraudsters and persuade you that this instruction is genuine. It will look and feel like it's perhaps come from a bank, maybe a government body, maybe you're in the process of buying a house and you're waiting for and expecting an instruction from your solicitor to pay 10% deposit in order to exchange contracts. You're expecting that instruction to come through. Or at the other end of the scale, you could be waiting for a parcel. I mean, who hasn't been in every week for the last 18 months, right? Sit at home waiting for a parcel, you get a text message saying, we have your parcel, it's just £2.70 short of the fee. Go online, pay this to me, simple, and we'll get your parcel to you tomorrow. Who hasn't fallen for that? So there are many ways. So how do we stop this? And I think, Liam, you already mentioned the talk of collaboration and that view across the entire journey of that transaction request, initiated by me, legitimately by me, analysed by my bank, and there's nothing to suggest it's not me making that payment request, right? How can our banks really stop that? And you're absolutely right, Liam, collaboration is the key. If we can somehow get that transaction analysis that always happens when I send money out of my bank account to confirm that this doesn't look like a fraudster, we need to make sure that when that recipient bank gets that request, that there's somehow some analysis of that recipient account. My bank doesn't know at the sending end the reputation of that recipient account, but the recipient bank does. So we need to join these two dots together, to your point, and make sure that transaction analysis happens in real time across the board.
So you're really highlighting that, Leah mentioned the collaboration, but the collaboration is specifically about the need for initiating and the recipient banks, whether you call them issuers, acquirers, they're the sender, the receiver banks, to work together with regulations. The onus should not just be on the sending bank.
Correct. And you touched on regulation there. The UK payments organisation published the latest fraud figures. When you add together all of those fraud types that have been suffered by individuals over the last 6 months, those fraud figures are scarily high. For the first time ever, they've overtaken card fraud losses. Now, regulation protects the individual should a fraud occur on cards. The minute I discover a fraud on my card, I report it, I get my money back. That's not the same for APP frauds. In fact, even though the fraud losses exceeded card fraud losses for the first time this year, only less than 50% of those losses were paid back to the victims. And that's not because of missing legislation, in my view. I think it's that missing collaboration element that we can put in place. There are technical ways to do that. In the UK, we're introducing confirmation of payee, for example, and that will eliminate so many of the successful transactions. If the account name that I put in my instruction doesn't match the account name in the recipient bank, just reject it. And I think that will really protect a lot of these fraud losses going forward.
Okay, so we've touched on some of the learnings from the UK. We've touched on collaboration, education, sender, receiver, bank. These are all important elements to ensuring a successful scheme. And obviously, we've got 13 years of knowledge behind us. So Jackie, let's just park those thoughts for a little while. Thank you very much for that. And I want to focus in on one of the newcomer markets now, specifically Brazil, with the PIX system. Real-time payments in Brazil is seeing the growth that other countries have experienced and, quite frankly, others have hoped for. Within a few months of launching its real-time payments scheme, PIX, Brazil was amongst the top 10 real-time payment markets in 2020, processing over 1 billion transactions in those first few months. In this year's ACI report, I remember our prime time for real-time report, we predicted a very strong adoption of the new payment type as expected. But the actual analysis is just coming in for this year, and we're seeing it even higher adoption rates than initially predicted. And we'll be sharing the results of our analysis in the next edition of the Primetime for Real-Time report. So if you're not already registered to receive that report, please go ahead and go to the ACI website and register for your copy now. You can get this year's report, and you can make sure you're going to get next year's results with all those fantastic insights. PIX has seen outstanding adoption with over 100 million individual users and a vibrant ecosystem of 750 banks and non-banking participants, all desiring to be part of the PIX volume explosion. And it supports a wide range of instant payments use cases while substantially enhancing the user experience, the customer experience, and introducing new ways for consumers to initiate payments. PIX has now become the preferred method of payment in Brazil, overtaking traditional models like bank transfers, boletos, etc. So I'm really pleased today that we can be joined by Kleber Martins, ACI's Head of Fraud Management, who's actually based in Brazil. Kleber, you're better placed geographically than me to talk about real time in real life in Brazil. Perhaps you can share some of those insights.
Thanks, Craig. Yeah, I'm very close to where the trouble is, right?
Always.
And by the way, PIX is completing 1 year now in November.
Yeah,
and you're right, being over 100 million individual users, but also 7 million corporate users there. So it has really changed, the way you do business. It facilitates a lot. I think there's a lot of new opportunities for businesses to enhance their offer to consumers because of PIX. It made it much easier to pay, right? But as Leon referred to earlier, easier access to money or easier access to cash is a very attractive product for fraudsters as well, right? The easier you make for consumers, the easier you make for fraudsters. At the end of the day, what they're after is putting their hands on the cash. So we've passed through many years of, different attacks. That e-commerce has been a problem. They were getting products just on the black market. And in Brazil in the past, the speed kidnappings were a problem because they would get, people on the road and go through ATMs to get access to cash, right? Withdrawing money. And there were some mitigation factors back there by putting limits on the transaction, especially overnight. And, if you look at PIX just in São Paulo, there was a raise of 40% on speed kidnappings again. And what the criminals are after is the same thing. They're after that quick access to cash. But now, instead of putting people in the car and again a gun on their heads, and going through ATMs, they're actually opening the mobile device that they have in hands and passing through all that authentication that you put the banks will put on the app to guarantee that's the customer initiating the transaction. And guess what? It is the customer initiating the transaction, right? So the central bank, in reaction to that raise on the speed kidnappings, has just implemented new mitigation controls, and now there's a limit for those individual fixed accounts to make transfers overnight, which is around $200 or 1,000 Brazilian reais. But as also Leon referred to earlier, it isn't anymore about the initiation part of it. They will pass to the initiation, the scams that Jack has just explained in details, and how they get you to perform transaction. Everything you do from the initiation perspective of a PIX transaction is important. Okay, it's very important, but this is not going to resolve the PIX by itself. So you need to look at that from the receiving ending as well, right? And that's where collaboration comes. You have just referred to 750 participants, so you must imagine that a single participant does not have enough of a view to understand what's happening around. They need to collaborate from an industry perspective. And as Jack said earlier, there needs to be a way where that collaboration becomes systemic without sharing private data, but where you can leverage from analytics or machine learning, and everybody gets to benefit. So the industry becomes more, or the PIX product becomes more secure if everybody's collaborating from the initiation side as well as from the receiving ending of the transaction.
So we're seeing quite a big shift in Brazil, very rapid changes to market conditions related to fraud, and indeed the central bank themselves getting involved and making sure that they're putting the controls in place to give the consumers and the users, the participants, the protections and security that they need in order to gain confidence in the scheme. Nothing kills a scheme more than lack of confidence, and security and fraud issues would certainly be top of the list there.
Yeah, and here's where we need to be careful, right? The more controls you put on the top of it, the more secured on the initiation, the more complex it becomes for the users as well. So the central bank has react, and they indeed put some limitations, and there's a demand for each of the, let's say, the account owners, right, where transactions are initiated, to give the customers or the consumers some control of those limits as well. And there's an ask for every participant to have stronger, let's say, risk management capabilities or solutions. But at the end of the day, it needs to be about the whole network collaborating, right? I think the central bank hasn't reached that point, at least not in Brazil. But if you look at what Vocalink's doing with Mastercard in the UK market, right? This is a very strong way where you can leverage the knowledge, the reputation that exists around those accounts, around the whole industry, to benefit the consumer by being able to better understand where the risk is, right?
All right. Thanks, Kleber. I know time's pushing on. So same question to you that I gave Liam. What's the main takeaway from Brazil's experience so far, especially as other newcomers, including those experience, such growth that we've seen in Brazil?
Well, I think the first key takeaway is the same they have on markets that are up for 13 years, right? Fraud gotta be top of mind. It cannot be left for later, right? You need to start with fraud in mind from day one, and making sure that you have the proper controls in place to react immediately. So remember, criminals are exploring the vulnerability. So if you will have some out there, and they will find your ability to react will demonstrate how effective you are doing risk management, right? So you got to learn from the experience from the other markets. I think Brazil is showing a lot of experience already for the next markets to learn, but it needs to be about collaborating and reacting immediately for anything that might go wrong. Look at the US market, who are just starting. They need to leverage everything that's happening all around the globe.
Thanks, Kleber. So let's do exactly that. And let's go and now talk about a market going through large digital and real-time change. Let's bring back Liam from Mastercard. Welcome back, Liam. Perhaps you can bring
Yeah.
us up to speed on the US and the changes that are going on in the US at the moment.
Yeah, the U.S. is it's an interesting market. There's no clear mandate from the central bank to drive real-time payments, and so you're seeing a lot of industry players coming into the market, and then now a latecomer in the Fed. But the U.S. has had flavors of real-time payments for years. So our partners, the Clearinghouse here in the United States, introduced the RTP scheme in 2017. And it's the only real-time clearing and settlement mechanism in the market. But then you've also got a number of P2P applications like Venmo, Zelle, and Cash App that are growing tremendously. Particularly, pre-pandemic, but post-pandemic, they've seen explosive growth. I saw an estimate that said they were going to be at $1.3 trillion by 2023. So some pretty massive numbers, and then you've got the Fed coming into the picture by end of 2023. And from a fraud professional's perspective, I just look at this market composition and think that each of these different venues to make a real-time payment for a consumer or a business creates a different set of opportunities for fraudsters to exploit. Just right on the back of what Kleber was talking about, and I think that. To me, talking about the lessons learned and from the UK and from Brazil, and how do we start to learn from those and apply some best practices to markets like the US and other markets around the world that are adopting and introducing more modernized real-time payment systems. My biggest takeaway and bit of guidance would be to be proactive. Right. I see too often that the industry is reactive and waits for a burning platform. Right. And look at what Jackie talked about in terms of authorized push payment fraud, scams, essentially social engineering attacks like romance scams, investment scams, out-taking card fraud in the UK. First time ever. But every payment system operator and bank around the world should look at that and take it as a warning shot and say, are we doing enough proactively to protect our customers, consumers, and businesses from those types of attacks? And what are the best practices and approaches to making that work? And it's not an individual effort, as we're all talking about. I think a lot of it has to do with collaboration between the sending and receiving bank. There needs to be an obligation on both the sending bank and the receiving bank in order to start addressing that problem.
I will just mention, sorry, you'll have to excuse me for doing this, Liam, but ACI already are provided to the participant banks in the markets that we've already discussed, currently live with solutions for Clearinghouse and Zelle, and we're a pilot participant for the upcoming FedNow scheme. So if you're a bank or a participant looking to not just do real-time payments, but secure real-time payments, then please do get in touch and we can share our knowledge and understanding and help you be ready for that market implosion. So again, Liam, I'm going to come back to that question again that I've been asking. What's the biggest lesson for the US at the moment and other markets that are still thinking about launching new schemes?
From my perspective, it's being proactive, right? And looking at those best practices that we talked about, and in particular, don't wait for the problem to be a burning platform before you start to address it. And I think that the collaboration between sending and originating and receiving banks is going to be a critical one to solve for issues like authorized push payment fraud.
All right. Thanks, Liam. So let's bring back Jackie now to help us tie this all together. Now that we've touched on mature real-time markets like the UK, the high-growth newcomers like Brazil, and the future with new schemes such as in the US. Thanks, everyone, for the insights. Let's take a few minutes now to look through some of the lessons learned. So can I ask each of the experts, what the key thing that people should take home with them today from the discussion we've had? Kleber, maybe I can start with you.
Yeah, I'll just reinforce the message, right? Don't expect to solve fraud problems later. You got to be top of mind from day one, and do not assume that you'll be able to handle fraud on real-time payments just by mitigation controls on the initiation end. It must be about both ends collaborating. So collaboration has to be there from day zero.
All right, and I'm just keeping an eye on some of the questions that are coming in. A reminder to people, if you do have questions you want to ask the panel, please do send them in, and we'll have some time at the end to tackle some of those. We've got a few to tackle already, so please do send in your thoughts. So Liam, same question to you really. What's the one thing that people should take home with them from our discussion?
I think that it's that you need a multi-layered approach to mitigating risk, particularly related to fraud and money laundering. I think, first and foremost, it's education and awareness of your customers that these types of risk exist. Second, it's incorporating advanced technology and capabilities like biometrics, like predictive analytics, to identify anomalous behavior and stop it before the money leaves the bank. And then third is what I think we've all been driving home is collaboration, sharing of insights and information between sending and receiving banks, whether that's working, through an association, a scheme, or with a third party partner.
All right, thanks, Liam. And Jackie, if you've got time between all of your internet shopping deliverers that are coming at the door all the time, what's your one insight you can leave the audience with?
Well, luckily the doorbell hasn't gone and the dog hasn't gone mental. So during this, well, I've got a couple of things. I think somebody reminded me that faster payments has been around for decades. It's just not been controlled by anyone outside the bank before, right? So banks have always been able to send immediate payments from one account to another. And the fraudster, if it's fraudsters can take that money out quickly and start layering it around as they're doing today. So what's changed? Why suddenly has this become an issue? For me, it's because when this was controlled by the bank, that individual at the bank had the backstop, had that safeguard, that safety net of an auditor, of a tried and trusted process, maker checker, had the threat, if you like, of regulatory fines if you did it wrong. So they were doing everything they could possibly do before they pressed that send button that said, am I sure I'm right to do this? What's changed is the onus of all of that and the responsibility of all that is now on the shoulders of me. And I don't have that backstop. I don't have that voice in my head that says, have you checked everything? Are you sure you want to do this before I press that? I think the other point for me is, why do we have to do this in milliseconds? Have we ever asked the general public to say, when you want to enter into this faster payments world, are you really sure you need to do this in milliseconds? How about half an hour? Would that give us time to do this and fine tune this so we can get it down to seconds and still be safe? I think there's a lot of things we can think about in terms of our lessons learned and who we need to bring in from a collaboration point of view. We've talked a lot about the UK banks doing this, confirmation of payee, this starting process of sharing information across that whole chain to understand the reputation at both ends. But yeah, that's just the UK. We need to make sure that we do all this globally and we don't forget the other participants in this whole industry. So things like, is there education in the investigation of fraud events so that there is appropriate punishment at the end of the line? Is there real deterrent at that end? I think there's a huge amount we need to consider to make sure that this becomes something that nobody, if you're a fraudster, really wants to step into.
Yeah, and just Craig, if I may compliment, Jack brought up a great point, right? Part of the reaction of the central bank here is to allow more time for some transactions. So that's the whole point, right? Take fraud from day zero, and then you'll be able to cover those things ahead if you leverage the experience of the mature markets, the more mature markets.
Well, thanks everyone for those insights. So we have got a few minutes now to tackle some of the other questions. Actually, I want to come back on one you just kind of touched on there. Question came in, which is more conducive to stopping consumers becoming money mules, education or deterrence? Which I think is a great question. So Jackie, I'm going to come straight back to you specifically for that, just because you raised the point initially, and then maybe Liam for some insights there.
Well, I think it's a bit of both, to be fair. I cannot believe that 80-90% of money mule accounts are not entering that field already knowing they're doing something wrong. There are some very legitimate advertising out there looking for people to work from home and be a money agent, money transfer agents. All you need to have is a UK bank account, for example. You don't enter that field and do something for nothing. 10% of anything that goes in your bank account you can keep, as long as you just immediately transfer it out to this and this account. I think education does help, but I think there has to be effective punishment as well. There has to be deterrence. But I also think that the banks have got systems that allows them to see the behavior patterns of accounts that can identify whether or not an existing good account suddenly turns bad and becomes a mule account, or something that has just opened up. Make sure they've got the right documentation. It's not using fake account opening documentation to open that account, and make sure you're monitoring from day one the behavior of that account. And to me, there's a huge amount that can be done as a recipient bank to really better understand who are and who are not behaving like mule accounts.
Leah?
Yeah, I would totally agree. I think it's a combination of the two. And I think that the education piece will maybe help address the unwitting mules, right? But it'll only address a larger percentage of those unwitting mules if there's also a stick on the other end, right? So you do need some enforcement and deterrent. And then, I'd say that mule accounts are critical, right? They're inextricably linked between a fraud or a scam, right? The recipient is a mule account, right? And that account is used to continue funding the proceeds and ongoing operations of criminal activities, right? So I think there needs to be an increased effort, both with consumers as well as in the industry around deterring that type of activity. And I think that unfortunately, the criminals tend to prey on the bottom of the pyramid, right? And they make it rather attractive and lucrative for the witting mules to engage in those criminal activities, and offer them things like 5x what their monthly or weekly wage would be, which is a really hard thing to turn down, right? And unless there is a strong enough deterrent, right, that is well known amongst the general public, then you're going to continue to see people saying yes to those types of offers. So it's a bit of the awareness, but it's also the deterrent to say no to an offer that seems too good to be true, because it most of the time is. And so, yeah, I mean, it's going to be, I think, a very, very big challenge to overcome. But without doing both, I don't think that we have a chance of improving the situation.
My son is at university at the moment. He was saying how there's actually some education going on campus about not becoming a mule for these accounts.
That's great.
Students are, typically not wealthy and therefore are very attracted to the extra income. So it's good to see that is happening.
Yeah, but there must be some accountability on the receiving banking as well, because nobody watched incoming money with the same concern as outgoing money, right? So it needs to be between the two. That bank also has to take some accountability.
Yeah. So I want to just touch on one last question, actually, which I think is a very key one. But we've actually had 2 or 3 different points come in, so I'm going to try and morph them together without ruining the context. So it was about data privacy when combating fraud. And one of the points that was raised was, when we say collaboration, how do we handle the data sharing? How do we deal with the privacy issues? So a user may be quite happy to share all of their data with their bank, but are they prepared to share all of their data with every other recipient in the chain? So
let me take that, Craig. Basically, not sharing data. We shouldn't share data to collaborate. The only reason we share data or talk about sharing data is because someone with that data should be able to do a better risk assessment. So do we really need to share the data? You don't. You need to share risk insights, right? You need to convert the data on where the data exists into some signals that will indicate risk, and especially be correlated with other signals. So the initiation bank should not share any data about the customer. The privacy should be retained there, even the business privacy from the banking perspective, as well as the customer privacy. What the bank should do is give some insights about some risk, and that can be totally hidden, as an example, right? The customer has never used that channel. There is a risk indication there. You don't really need to say the risk indication is there because they have never used the channel. You create a risk signal with that. And machine learning is able to, correlate the signal with the other signals that the receiving banking has. As an example, this account hasn't been used for a while, right? So as you convert data into, risk signals, you are preserving the privacy. And that's why it's so important to use advanced technology on that collaboration to make it real time. So the whole ecosystem leveraged from that without exposing either their business or their clients.
Okay, and Liam, any final points from you?
Honestly, I think Clever hit the nail on the head. It's not about sharing data; it's about sharing those insights. And I think that that those same techniques around machine learning, but also the way that we can obscure the data to generate those insights. There's equal, I think, advancements in how we share insights as there are equal advancements in terms of regulation, in terms of protecting data, right? But again, I think these are for the purposes and legitimate purposes of preventing fraud and money laundering. So it's quite a bit different than I think a lot of the conversations that take place around consumer privacy.
All right. Well, thank you to all of our speakers today, Jackie and Clever from ACI, Liam from Mastercard, and for bringing us your expertise and insights on this critically important topic of real-time payments fraud. Thank you to everyone for joining us today. Have a great day.
Thank you, Craig.